So if you've been watching the markets today, July 31st, 2025, you definitely felt that rumble. Apple's latest quarterly earnings just dropped, and, well, they're making some noise. Today, we're doing a deep dive into Apple Inc. Specifically, we're going to dissect its recent fiscal Q3 2025 financial results. Welcome to everything you need to know about finance. Our goal here, our mission really, is to unpack all these numbers, pull out the surprising bits from the reports, and help you make sense of what actually matters. Now, just a quick note for you. What we're about to explore is purely an in-depth analysis of the information, right? It's not financial advice. And hey, if you find this kind of content interesting, please like and subscribe to stay informed with us.
Yeah, and that's really key. Understanding these reports, it's way more than just skimming headlines. It's about digging into the actual timely information Apple just released and, seeing the bigger picture. So today you're going to get a really clear view of Apple's, astonishing financial performance, the trends underneath driving products and services, and yeah, we'll definitely look at how the stock reacted.
Okay, all right, let's unpack this then. We're talking Apple's fiscal 2025 third quarter. That ended June 28, 2025. The big numbers, the headlines, they're pretty staggering. The company posted quarterly revenue of $94.0 billion. Just huge.
$94 billion, wow.
And that's up a full 10% year over year. Then you look at the earnings per share, diluted EPS, that came in at $1.57, which is up 12% year over year. And these aren't just like good numbers. They represent a June quarter revenue record for Apple.
Yeah.
And a record for earnings per share, too.
Right. And what's truly fascinating here, I think, isn't just the size of the numbers, but the breadth of that growth. According to Apple's CEO, this performance reflects, and I'm quoting here, double-digit growth in iPhone, Mac, and services, and growth around the world in every geographic segment.
Great segment. Wow.
Every single one. For a company this massive, achieving that kind of broad global growth, it suggests incredible resilience and really deep market reach. They're not just relying on one area. Plus, their installed base of active devices, basically every iPhone, Mac, watch, everything out there being used, hit a new all-time high. Again.
Seems like we hear that a lot.
We do, and it's more than just a vanity metric, right? It signals how sticky their ecosystem is, how loyal customers are, and it points to future service revenue. It's foundational. Just for context, remember last quarter, Q2 2025, ending March 29th, revenue was $95.36 billion, up about 5% year over year. Net income, $24.78 billion, up just under 5%. So Q3 really shows a clear acceleration in growth for both revenue and EPS.
That's a great point. The acceleration, it definitely sets the stage. So how does this huge revenue actually break down? We're talking products versus services. They're two main engines. Looking at Q3 2025 net sales, products brought in the bulk, $66.613 billion.
It's still the giant share, yeah.
But services generated a really strong $27.423 billion.
Yeah.
And if you compare that to Q3 last year, products were $61.564 billion, services $24.213 billion. So yeah, significant growth in both, but services just keeps climbing steadily.
Exactly. And if we connect this to the bigger picture, maybe dig into the individual product categories for Q3, the iPhone strength just leaps out, $44.582 billion. That's up quite a bit from $39.296 billion last year's Q3. The iPhone is still the absolute engine.
Still king.
Totally. Mac revenue also grew nicely, $8.046 billion, up from about $7 billion. So the computer line is doing well too. And like we said, services hit that new all-time high. It's just consistently proving itself as this high-margin growth driver.
Okay, so iPhone, Mac, services all strong. Were there any weaker spots?
Yeah, and it's important to note those too. iPad revenue actually dipped. It came in at $6.581 billion, down from $7.162 billion. And wearables, home and accessories, that's things like Apple Watch, AirPods, HomePods, that was $7.404 billion, down from $8.097 billion.
Yes.
It is relevant, right? Because while the overall story is growth, it shows not every single line is surging. Could be market saturation, could be people waiting for new models, But importantly, the overall growth was global. Every geographic segment grew.
Okay, so beyond sales, this is where it gets, I think, really interesting. Let's talk financial health, stability, long-term stuff. Balance sheet. As of June 28, 2025, total assets, a mind-boggling $331.495 billion.
Just massive.
Total liabilities were $265.665 billion. That leaves total shareholders' equity at $65.830 billion. These numbers just paint a picture of Well, an incredibly solid financial foundation. But with all that cash flowing in, what are they doing with it? It's just sitting there?
That's a perfect question, and the cash flow statement gives us the answers. So for the 9 months ending June 28th, cash from operating activities just running the core business was $81.754 billion. That's huge. Shows how efficient they are.
$81 billion from operations alone.
Okay, but here's what's really striking. Cash generated by investing activities, it soared to $17.782 billion.
Wait, $17 billion. Didn't you say last year was much lower?
Way lower. Last year, same period, it was only $1.490 billion. So this is a massive, massive jump.
What does that suggest? What are they investing in?
Well, it suggests they're really doubling down on the future. It could be increased spending on manufacturing for, say, their new AI chips. Could be strategic acquisitions, maybe R&D for Vision Pro. It signals a big bet on what's next, an aggressive move, potentially.
Okay, and what about returning cash to shareholders? Buying back stock, dividends?
Yep, that's in financing activities. They used $93.21 billion there. A huge chunk of that, $70.579 billion, was buying back their own common stock.
$70 billion in buybacks. Wow.
Yeah, reduces the share count, boosts EPS for everyone else. And they paid out $11.559 billion in dividends.
So even after all that investing in shareholder return?
Right, even after those huge outflows, the net change in cash for the 9 months was still an increase of $6.326 billion. Speaks volumes about their financial muscle.
That really is a strong sign. Generating cash, investing heavily, returning tons to shareholders, and still growing the cash pile. So, okay, all these impressive numbers land. How did the market react? The stock itself? Well, the stock closed at $207.57 on July 31st. Then after the earnings hit, in after-hours trading, it bumped up to $209.67. That's up about 1.01%. The day's range was between $207.16 and $209.84. So a positive initial reaction.
Definitely positive. And if you kind of zoom out, look longer term, its 52-week range is pretty wide, $169.21, all the way up to $260.09. That shows you it's seen quite a bit of movement over the past year, right? Reflecting different market moods and news cycles.
Absolutely. Yeah.
But the immediate news cycle around these earnings, overwhelmingly positive. Headlines like, Apple stock climbs after earnings beat estimates, crushes Wall Street expectations as iPhone sales soar, that kind of thing.
Yeah, I saw those.
There's also broader commentary talking about how Apple managed to, quote, overcome Trump's trade war or a perceived slow start in AI. Some reports even hint that AI is boosting tech earnings generally.
Interesting context.
Yeah, it paints a picture. Now, most analysts seem pretty upbeat. You see folks like Neuberger's Flax calling the shares attractive after sales beat. But, there's still chatter about challenges, the whole Qualcomm modem transition thing, or even some criticism aimed at Tim Cook about a recent tech showcase someone called an episode out of Back to the Future.
Mm-hmm. Okay, so not all sunshine and roses.
Exactly. It's nuanced. The fundamentals look great, giving them runway, but they still need to keep that innovation story really compelling.
Right. So putting it all together, what does this stellar quarter mean for Apple's future path? These earnings definitely seem linked to their strategic talk, right? Like the CEO talking up WWDC 25, the beautiful new software design, teasing even more great Apple Intelligence features.
Yeah.
How does that connect?
It connects directly. These innovations, Apple Intelligence, refining all 6 of their platforms, iOS, iPadOS, macOS, watchOS, visionOS, tvOS, growing services like the App Store, Music, Pay, iCloud, TV Plus Pro. They're not just features for features' sake. They're about locking people into the ecosystem, driving that loyalty we talked about, and building those recurring revenue streams. It's all part of the plan. And the fact they declared another cash dividend, $0.26 per share, payable August 14th. That shows the board's confidence. It's a tangible return to shareholders saying, we're doing well and we expect to keep doing well. It also fits with their broader mission statement, aiming to leave the world better than we found it. It's this whole package, financials, innovation, user experience, values that keeps them so strong.
Okay, so let's recap this deep dive then. Apple delivered a really robust Q3 2025, driven by super strong iPhone, Mac, and services growth. Record revenues, and significant cash flow from both operations and that big jump in investing.
Right, showing present strength and future focus.
And all that translated into a nice positive bump for the stock right after the announcement.
Indeed. And looking forward, their continued push on innovation, especially with AI features combined with that massive, super loyal installed base. it positions them really well, even in a tough market. Which leads to, I think, an important question for you, our listener, to kind of mull over. How will Apple balance that core reliance on the iPhone with growing services and nurturing these newer bets like Vision Pro? Is the next big growth engine going to be a whole new product category? Or will they just keep deepening the ecosystem's hold? That's definitely something to watch as they navigate the next few years of growth and intense competition.